Welcome to the video on tax deductions and tax credits presented by PAPE Canada. In this particular video, and it should be a relatively short one, we're just going to cover very quickly what the differences are. We've all heard the term tax deduction, tax credits here in Canada, and people go, hold on, well, what's the actual difference between these two? Well, it's pretty easy actually. So if at the beginning of the year I get a full-time job and I set out to work, I earn, let's say, $100,000 throughout the year, I'm pretty happy about that, as demonstrated here by the smile on my stick figure. So people say, well, what's a deduction? Like, okay, if I earn $100,000 of income, I have to pay tax according to different tax brackets on the income that I'm earning. As I make more money, the next dollar will be subject to a higher marginal rate of tax. The total taxes that I pay divided by my income is my average rate of tax. Where a deduction comes in is, as an example, an RSP contribution. Instead of having to pay tax on income of $100,000, let's say I put in $10,000 to an RSP, that creates a $10,000 tax deduction, which means that I'm paying tax on income of $90,000. So let's say my marginal rate of tax was 30%. When my employer was paying me, they took Canadian income taxes off at source, meaning before it made its way into my bank account. But it turns out they didn't have to do that because I put the $10,000 into an RSP. Well, if my marginal rate of tax is 30%, I will get $3,000 back for my $10,000 RSP contribution. All right. Now, that's a tax deduction. Now I want to cover what a tax credit is. So going back to the guy who earned $100,000 a year, and the average rate of tax was, let's say, 25%, the taxes owing for the year are going to be $25,000. And so just to bring you through the process, you earn so much, you arrive at taxable income, then you have, you multiply it out by the marginal rate of tax, you have taxes owing. This is the tax owing. Well, now we have to discuss the credits. If I receive a tax credit of $10,000, which is a large one, by the way, I have to ask myself, what is the conversion factor for that tax credit? Unless there's a specified conversion factor like charitable contributions or contributions to a political party, it is almost always 15%. And so what happens is after I multiply it by the 15%, I come up with $1,500. And so I take that $1,500 and I subtract it from the amount of taxes owing of $25,000. So now I only pay taxes of $23,500. So very quickly, a tax deduction impacts the amount of taxable income. You then take that amount, you multiply it by the marginal rates of tax, you get your taxes payable. Whatever credit it is, you have a conversion factor, you get to a net amount. You can then use that amount to reduce your taxes payable. So it's just where is it going to be impacting your tax situation, on the top line, on the amount of income you're earning, or on the bottom, how much taxes you have to pay. Of course, people always ask, well, which one is better? Like if I had a choice between, $1,000, tax deduction or $1,000 tax credit, which one do I want? Well, it really depends on your marginal rate of tax. In this example, if somebody's marginal rate of tax is 30% and they get a tax deduction of, $1,000, well, they're going to save $300 because that's 30% of $1,000. Whereas if you had a tax credit of $1,000, you would multiply it by 15%, and you would save $150 in taxes payable. 300 is bigger than 150, so I would prefer to have the tax deduction. I hope you found this video informative. Thank you for listening.